Ring the bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Katie Greifeld and Scarlet Fu counting it down to the closing bell. And here to help take us beyond the bell, we have a global simulcast joined now by Tim Stenovec and Jess Menton. And we bring together all of our Bloomberg audiences, television, radio, YouTube originals to talk about some of the crucial moments of this trading day. And Tim, I got to say, it was a little bit boring.
Yeah, I was going to say, tell me about the crucial moments, Katie.
I was hoping you would.
No, I'm going to go back to something that Marianne Bartels just told us. We were speaking to her just a few minutes ago. She's chief investment strategist at Sanctuary Wealth, and she reminded us, we're in this time of the year that things are a little quiet, although it's the end of the summer and, fall has started. Apple's doing its thing next week.
The solstice hasn't happened yet. Just
the what hasn't happened yet?
The solstice. It's still summer.
You're right.
Yeah,
you're right.
Please.
And it was 90 degrees yesterday, so.
Yeah.
I know.
It's brutal out there.
She does think we're still in this seasonal correction, though. And, we're a couple percentage points down on the S&P 500 from the highs of July. But she thinks there could be further downside to go, though the end of the year, she's still calling for a double-digit increase on the S&P 500.
Yeah, SCAG Go, we always like to talk about that to look at seasonality in the terminals. So we do know when you look back in history, September typically is the weakest. It was particularly when it comes to the S&P 500, but still questions, right? We still have CPI next week, obviously the Fed decision on the 20th. So it'll be interesting to see how particular funds are squaring things away once they get closer to the end of the third quarter.
I feel like a lot of the excitement of this week happened early on in the week, on Tuesday, with the corporate bond issuances, for instance, stealing so many headlines. And then it just kind of petered out, Katie, over the last few days, especially what Matt Brill was telling us of Invesco.
Yeah, and we'll see whether that was just the post-summer rush. But you take a look at this equity market right now, 5 seconds to go. The S&P 500 actually managed to claw itself back into the green. We had dipped into the red. Going to finish this Friday almost 0.2% higher, though. It is a down week for the big benchmark. The NASDAQ composite, it's up about 0.1% as well. The Dow Jones, your relative outperformer, but just barely going to finish up about 0.2%, Tim.
Yeah, looking at the last 5 days, even though it was a shortened trading week, we're seeing the NASDAQ down 1.9% over the last 5 days. The S&P 500 down more than 1%. That's 1.1%. The Dow Scarlet down 0.4%.
All right, so let's dig beneath the big, broad numbers and look at how the industry groups have performed. On the day, energy higher by 1%. That's as oil prices stay elevated. They did stumble a little bit in the middle of this week, but very much the story here is on production cuts from Russia and Saudi Arabia. And in fact, energy stocks are the best performers of this holiday shortened week as well. Software and services, your third best performers, up 0.8%. They are the second best performers of the week. And then you have utilities, so a little bit of defensive positioning here, at least to end this week. On the downside, you've got telecom services, autos and parts, and of course we're waiting for some kind of development there on the negotiations between the UAW and GM and Ford, and chip makers all closing down by at least 0.75%.
Okay, well, let's go into some of the gainers, some of the stocks that were in the green today. I want to start with Apple because it's just been a brutal week for the company. Shares closed down about 6% so far this week. Shares moving higher, up 0.3% on the day today. I mentioned Marianne Bartels once again because we did talk to her about Apple. She said that she doesn't see anything long-term broken here. She just thinks the market and tech is in a period of consolidation. But people who've missed this rally when it comes to the broader markets and when it comes to tech have been taking a bite lately. Also, taking a look at other companies that moved higher today, Kroger shares finishing higher by just about 3% on the day today. It's rising the most since March. This after it agreed to sell more than 400 stores to CNS Wholesale Grocers. It's a divestiture. It's designed to help win antitrust approval for its $24.6 billion merger with Albertsons. And then how about a little executive shuffle to get a stock moving? CSX shares finishing up by 1.6% today. This after it named Mike Corey, a former executive from Canadian National Railway, as the freight transportation company's first COO. Bank of America actually coming out after the news saying that raising its rating to buy, calling Corey a, quote, guru of precision scheduled railroading, a strategy that is, of course, aimed at improving operations. Jess.
and I'm going to take the losers or the decliners, however you want to call these for this. So RH, formerly known as Restoration Hardware, if you look at that stock down almost 16%, so this is basically its worst day since March of 2020, but its shares did decline after the midpoint of its third quarter revenue forecast did miss estimates. Another one I wanted to point out is Hudson Pacific Properties, that's ticker symbol HPP. That's down almost 3%, so looking at that stock under pressure and did falling after suspending its quarterly dividend amid the writers and the actors strike. So when you're looking at that, obviously it's a pain point because it is a major landlord in Hollywood in particular. And then DocuSign, we did hear earnings results from them after the bell yesterday. Obviously the e-signature company that is popular among a lot of people, including myself. But if you are looking at those shares down, actually close to 4%, so its worst day since July 20th. So even though it posted second quarter results that did beat expectations, not good enough to keep that stock higher and pulling back from those gains earlier in the session.
All right, let's get on over to the bond market. An interesting day today, although quiet, just like the equity market. Let's start here with 2-year yields actually rising a little bit of a sell-off there. Still below that 5% level. You can see the 10-year yield. I'm going to call that unchanged. The 20-year yield, I'm going to call that unchanged too. And the 30-year yield, it did fall a little bit by about 1 basis point. And we think about August and the month that we had. It was so dramatic in the bond market, and now we have 2 big weeks ahead of us, Tim. We have CPI next week, and then finally we get that Fed meeting. And I know it's expected to be a snoozer, but when you think about what we're going to get an updated projection from the Fed about where the economy is going to go, and we're going to hear some signaling, hopefully, from Jerome Powell himself about what does higher for longer mean for this Fed?
Well, we have a week and a half before the Fed actually speaks, before Jerome Powell speaks. So that's a lot of time for everyone to speculate and kind of play out their worst fears. You know, given that we saw earnings from GameStop this week, I was excited about the possibility that maybe dumb money would be coming out this weekend. But it turns out, no, it's next weekend.
What were they thinking with the timing there?
I know. They should have synced it up with the earnings release, right? I mean, who doesn't want to see Seth Rogen as Gabe Plotkin?
I will tell you.
Does the broader populace track earnings releases as closely as we do?
I mean, in my world, Katie, that would make sense. In your world, that would make sense.
Yeah.
I will say, in my universe, this movie is getting a lot of traction. My dad sent me a text earlier with a New York Times review of it, and it was like, "This actually looks pretty good. He's going to go see it."
That's cute.
Alex Steele has a small cameo in it. I saw
No
her.
way.
Yeah, in the
I
trailer.
love that.
Yeah.
Oh, now we all got to go see it.
We should all go
Let's
together.
do a little
That's
party.
pretty cool. That's pretty cool.
I'm excited.
I don't know. Is it going to surpass Barbie? It has a pretty high bar to meet when you think about some of the releases that we've gotten.
There's no way.
I don't think so.
No.
Let's hope it gets to like the Big Short level or Wall Street.
Yeah.
You know? I like our industry getting some love.
Yeah.
Finally.
I mean, when Mike McKee was talking to John Williams for the New York Fed yesterday, he actually asked him about the sort of Swiftonomics and the Taylor Swift effect on the economy. And he was saying, hey, that is a real thing here. And apparently, you know, he's keeping a close eye on. Obviously,
Jess,
not a big part of...
You can count on Jess to actually bring it back to something that we're supposed to be talking about.
Swift, Barbenheimer, you know, fun things here.
It all kind of gets back to the same thing. And I mean, Taylor Swift is coming out with a tour movie, which will be pretty fun to watch. I'm just determined to peel us off from actually an economic discussion here.
I didn't get to. I've talked about this on air, so people are probably bored of this, but I didn't get to see her in concert over the last few months.
I actually haven't heard you talk about this, Tim.
Well, that's because you're on TV when I'm on the radio.
Yeah.
So you're not.
You
Hopefully
don't have
not
a teenage
listening
daughter,
to
though, Tim. I feel like that's the requirement.
I know, but my wife and I would have really wanted to go to this to see her in concert.
What happened? Did you get
go see the movie.
outbid? Could you not?
No,
was
we
there
had
scarcity?
a kid. We had a kid.
Oh,
so
right, yeah.
That's a good reason
We
not
don't
to.
leave the house.
You didn't bring the infant to the concert?
No, we didn't.
You have to get the special headphones.
I do want to bring something back to like a serious conversation a little bit. The rise in oil prices that we saw this week, and wondering what that means for CPI, Jess, and wondering also what it means for the Fed's fight against inflation, because they have no control over what oil prices do. We talked a lot about this last year, but the higher prices kind of rearing their ugly head again.
That's why they
Scarlet
strip out
Katie were
food and
talking.
energy prices.
But what's great is, as Carol says, Carol's not here, so I have to represent her. Fortunately, nobody pays for food or energy. That's what she says.
So you're going to bring up Chinese companies.
No.
No.
They also like to strip out housing, too, when you're looking at some of the super core there. For
Then
the
there's
power,
nothing
right?
left. Then there's nothing left.
Forget
left
food,
there.
forget energy,
Can
forget
I say,
housing.
though, it's interesting if you think about the different things that they do watch, because we know that the Fed cares very deeply about inflation expectations, and you think about how inflation actually touches consumers in the economy. It's through food, it's through energy. So if oil prices, if gas prices are rising, theoretically that feeds into inflation expectations, and the Fed still has to care about them.
The Bloomberg economics team saying don't get concerned if we do see something higher there, that the Fed is going to hike again this year. They think they're done for the year. All right, we'll see. Hey, everybody, have a good weekend, okay? Please.
Okay. You too.
Yeah. Maybe try to get a sneak preview of that new movie coming out. Really appreciate you guys joining us this afternoon and letting us hang out with you, of course. That is going to do it for Beyond the Bell. It's our cross-platform coverage of the market close on Bloomberg TV and radio, Bloomberg Originals, and, of course, on YouTube. Catch us same time, same place on Monday.